Welcome to the deep dive. We aim to be your shortcut to being, well, genuinely well-informed, cutting through the usual clutter. Today, we're plunging into the latest financials from a real heavyweight in India's defense landscape. Okay, let's unpack this. We're focusing on Bharat Electronics Ltd BEL and their unaudited results for the first quarter, Q1 of the fiscal year 2025-26. That quarter ended June 30th, 2025.
Right. And our mission here really is to sift through all the official documents you've got there, the press release, the financials themselves, standalone, consolidated, all the notes, the auditor's review, and pull out what really matters, the key numbers, the insights, and what it all means for a company as crucial as BEL.
Exactly. We've got the whole stack, the official filings, the unaudited results, standalone and consolidated, the notes, those auditor reports, and importantly, BEL's own press release giving their perspective. We want to understand the real performance story here, the strategy behind it, what it signals about India's defense sector, without getting bogged down in jargon. But, while the revenue growth looks okay, the thing that really jumped out at me was the profit surge. That's where it gets really interesting. So let's start with that big picture, straight from their press release. BEL definitely showed growth in Q1 this year compared to Q1 last year. Revenue from operations climbed to about 417 crores from roughly 200 crores. So yeah, a respectable 5.19% increase. But here's the kicker. Profit before tax, the PBT, that jumped almost 25% to nearly 1,290 crores.
Right, a 24.28% rise.
And profit after tax, PEF, followed suit, up almost exactly 25%, 24.87%, hitting around 969 crores.
Yeah, and what's truly fascinating here, as you said, is that profit growth way outstripping the revenue growth. It's not just about selling more. It points strongly towards improved efficiency, better cost management, basically.
Okay. So how does that work?
Well, if you dig into the standalone numbers, the details show their total expenses actually decreased slightly. They went down from about 3,036,293 lakhs last year to 3,029,121 lakhs this Q1.
Ah, okay. So lower costs despite higher sales.
Exactly. It suggests they've really optimized things internally, maybe supply chains, production, who knows. But it means more of that revenue hits the bottom line.
And maybe just a quick reminder for everyone listening about lakhs and crores.
Oh, right. Good point.
1 lakh is 100,000 rupees, and 100 lakhs make 1 crore. So 1,000 lakhs is 10 crores, helps keep those big numbers in perspective.
Absolutely essential. And, this improved profit directly feeds into shareholder value. We see that reflected in the earnings per share, the EPS, on a standalone basis. It went up from 1 rupee 6 paise last year to 1 rupee 33 paise this quarter, 1.33. That's a clear sign of better profitability per share.
Definitely positive for investors. Now, those Q1 numbers look solid, but for a company like BEL, future visibility is everything. Which brings us to the order book. As of July 1st, 2025, get this, it stood at 74,859 crores.
Wow. All right, 74,859 crores. That's huge
Sweet.
and incredibly important for BEL. Remember, it's a Navratna Defense PSU, a top-tier public sector unit with significant autonomy. An order book like that gives them phenomenal revenue visibility for years to come. It reflects, strong government defense spending, the Make in India initiative.
Modernization efforts.
Exactly. It basically guarantees a pipeline of work for a company that's, frankly, vital for national security.
Okay.
But it does make you wonder, are there any maybe geopolitical shifts or procurement changes on the horizon that might affect how quickly they convert those orders or bring in new competitors?
That's always the question, isn't it? Something to watch. But for now, that backlog looks like a very solid foundation. Now, we've mostly talked standalone results, BEL's core ops, but the consolidated picture is pretty much the same story, right?
Yeah, very similarly, friends. The consolidated PT, profit after tax, was also around 969 crores for Q1, almost identical to standalone.
And consolidated just means they're rolling in the numbers from their related companies.
That's right. It gives the full group view. You've got their 100% subsidiary, BEL Electronic Devices Ltd., and the 74% owned BEL Systems Ltd. Those are included line by line. Then there were associates like GE Private Limited, where they hold 26%, and BEL IAI Aerosystems, 40% owned. Those are accounted for using the equity method, basically reflecting BEL's share of their profit or loss.
Got it. And something interesting I saw in the notes, BEL is exempt from segment reporting.
Correct. Most big companies have to break down results by business lines or geography. But given BEL's unique, sort of unified role in defense production, the Ministry of Corporate Affairs allows this exemption. It really highlights their specific focus.
Okay, let's shift gears slightly. What about shareholder returns and other operational bits from the reports? Dividends.
Right. So the board recommended a final dividend for the last fiscal year, FY24-25. It's 90 pays per share. That's 90% on the face value.
0.90 per share.
Yes. And that's on top of the interim dividend they already paid out, which was 1.50 per share, or 150%.
So a pretty healthy total payout for shareholders, subject to approval at the AGM, of course.
Of course. Another key point, especially relevant today, is risk assessment. They specifically looked at their contracts involving companies in Israel, given the ongoing conflicts there.
And their conclusion.
Their assessment, as stated in the results, is that there's no material financial impact as of the reporting date. That's an important disclosure for a defense player. Shows they're monitoring the global situation.
Good governance touch. And speaking of process, they detailed the board meeting timings too, started at 10 a.m., finished by 2:45 p.m. on July 28th. The audit committee had reviewed everything a couple of days earlier.
Yeah. Standard procedure shows things are ticking along properly. And the auditors, Rao and MR, gave an unmodified conclusion on their limited review, meaning they didn't find any major issues with the way the financials were put together according to the accounting standards. They did mention relying on previous auditors for comparison figures and that some minor subsidiaries weren't directly reviewed by them, but management confirmed these aren't material to the overall consolidated view. That's pretty standard stuff.
Right. And just to round off the compliance checks, the report confirms no default on any loans or debt. Things like deviations from public issue objectives or related party transactions were marked not applicable for this period. So a clean bill of health on those fronts.
Yep, all clear there.
Okay, so if we boil it all down for you, the listener, the key takeaways from this deep dive are BEL showed really strong Q1 performance. Profits grew much, much faster than revenue, which points to some serious gains in efficiency and cost control.
Plus, they're sitting on a massive order book, guaranteeing work for years.
And showing diligent management, even assessing geopolitical risks like the situation involving Israel.
Absolutely. Which leads to maybe a final thought. Considering BEL's huge order backlog and its critical role in India's defense strategy, what could be the next big thing for them? What kind of innovation or maybe partnership could push their growth even further, beyond just fulfilling current orders, even in such a specialized field?
What's that next frontier look like? Something to definitely chew on. Thanks for joining us for this deep dive into Bharat Electronics Ltd's Q1 results.